Okay, so there must be segregation of duties, right? Segregation of duties. That's a key control. Then you should also check that a customer's order is within the customer's credit limit. Now, this is, this point, I don't know why ICA is more of a Ghanaian exam, so I don't know why they give examples. The book gives examples of things that are frequent in advanced countries. So basically, when you are buying something in an advanced country, what they do is they check to see whether you have the funds within your credit limits. In Ghana, we don't really operate the credit system. People buy things for cash. So it doesn't really apply there. But you can give it as an example. It doesn't mean you cannot give it an. I'm just talking about the practicality. So you need to always check. If someone is coming to buy something, you need to check whether they have the credit limits necessary to support that purchase. Another key control is authorization of orders. Another one, use of pre-numbered sales order forms. That helps to organize your sales orders. So as you can clearly see here, authorization is very, very important. If you go through the list, I won't mention all of them, but if you go through the list, you see that authorization is very important, right? Pre-numbering is important because it gives order to either your sales order forms or even your dispatch notes. It gives order to them. Then segregation of duties. These are key controls. Now let's move on to test of controls. Test of controls. Test of controls. Now let's look at sequence checks on all documents. Sequence checks on all documents. So, but what does this mean? If you've ordered or if you've numbered your sales order forms, you can do a sequence check. So if one number is not there, why is it not there? Maybe we check 1, 2, 3, 4, then it moves to 15, or it moves to 7. Why are those numbers? You can do a sequence check on all documents. You can check on evidence of authorization at each stage of the cycle. Right? You can also check for arithmetic. Sometimes there are situations where, maybe you buy a lot of items and for some reason the arithmetic wasn't done properly. So you buy cornflakes 2, cream crackers 5, and at the end of the day it should have been 70 Ghana, but they said 68. So sometimes you have to check for evidence that the arithmetic calculations have been done correctly. Very, very important. Very, very important. So those are some of the test controls or test of controls. Now, what about substantive tests? Substantive tests. Now, you don't necessarily have to chew this one. I'll show you a simple way so that I can remember. Otherwise, if you chew, there's a lot of things to think about these days. Otherwise, if you chew, it will be too much on you. Right, so let's talk about substantive tests. Substantive tests. Substantive tests. So what do we refer to as substantive tests? What do we refer to as substantive tests? When we talk about substantive tests, we are checking the arithmetic accuracy in the books of prime entry. Remember, substantive testing is more related to the financial statement. Test of controls is related to internal controls. So here you'll be seeing a lot of things related to the books of prime entry. The books of prime entry. So here you'll be seeing things related to checking the accuracy of how the of the postings to the ledger. Those are substantive tests. Account reconciliation. control account reconciliation. Those are substantive tests. So you see, number one, it says check the accuracy of the arithmetic in the books of prime entry. Check entries in books of prime entries. Check that they back up to source documents. Check the accuracy of postings to ledgers. Check invoices and credit notes for accuracy. So you see the kind of examples it's given them, more related towards the financial statements. So I said I'll give you a tip. Now, don't complicate this. It's not, don't make this thing too difficult. Here, we are looking at, if you are not, just think about this, if you're an organization, right? In terms of your revenue, what will be some of the control objectives? What are some of the things that you do to ensure that your revenue is safe and sound? That's how you think about it. You know, what are some of the things that you personally do if you have a business? You know, don't complicate that. If you have a business, what are some of the things that you personally do to keep your revenue? You ensure that, you know, it's recorded properly, right? If somebody comes in to make an order, you ensure that, you know, the customer orders are captured properly. You know, if some goods are returned, you ensure that it's captured properly. If discounts are given, you ensure that it's captured properly. You know, that's how you think about it. So you look at it in terms of the different layers of revenue, right? The different layers of revenue. Are prices captured properly? Is the quantity captured properly? Are discounts captured properly? Are goods returned captured properly? So just bring it home. Bring it home. If you bring it home, it will be easier for you. Any questions on that? Okay, so let's do something similar for purchases and payables. What are some of the control objectives? What do you think will be some of the control objectives for purchases and payables? Hey, are my people there?
So we can look at the receiving of invoices. Okay, so probably the person who receives the invoice should be different from the person who issues out the payment, so that there is has segregation. So there will be no issue of probably wrong payment or so on.
Okay, so you're talking about segregation of duties then. So you see some of these key controls, they apply everywhere. So as you go through, you see them. You know, so control objectives, here you see that proper authorization is here, right? Proper authorization. Goods and services are purchased with proper authority. You know, so that you just don't purchase by heart. It has to be purchased with proper authority. Before being recorded, purchase invoices are authorized. They are checked for arithmetic accuracy and pricing. You know, so these are things we even talked about when we are looking at revenue and receivables. Now, key controls, that's what Caleb was talking about, segregation of duties. You know, it's appeared here again. Use of pre-number documentation. You see, it's appeared here again. As you go through, you see that a lot of them overlap. A lot of them overlap. Appropriate authorization, you know, it's very, very important. Now, if you move on to test of control, sequencing appears here again. Sequence checks on all documents. Sequencing appears here. Again, checking for evidence of authorization appears here as well. So you need to check for evidence of authorization at each stage in the purchasing cycle. Again, here too, you are checking for arithmetic accuracy. Very similar to what we saw in the previous slide. Then when you move on to substantive testing, like I've always told you, here it's all related to the books of prime entry, the ledgers, the journal. So you see, it says check the accuracy of the arithmetic in books of prime entry, check the entries, check accuracy of the posting to the ledgers and all that. I hope it's clear.
Yes, sir.
Yeah, okay. Now, when you move on to payroll, what will be the control objectives? Again, you see the similar pattern. So gross pay, net pay, and deductions are recorded completely. Payroll, payroll is your salary, right? And the correct employees are paid the correct amounts. That's another thing you want to find out. And the correct deductions for taxes and all that are made. Now, what are the key controls here? Number one will be, review of the overall cost of payroll. So month on month, if every month you are paying 100,000 in payroll, we'll check it against February, against March. For people who work in accounting and finance, this is something that is done every, at least by my experience, the companies I've worked in, it was done monthly. They check payroll month on month. So if it's going overboard, it means that we need to investigate, or what is the reason for it. Then approval of payroll. Payroll has to be approved. Payroll has to be approved. Then there must also be good systems for processing payroll. There must be good systems for processing payroll. There must be good systems for processing payroll. Very, very important. Now let's look at test of control. Test of control. Here you are looking at the accuracy of the arithmetic in payroll records. Does the payroll record agree with the bank records? Because you are making the payroll or paying people's salaries out of our bank. Then we need to review payroll for unusual amount. These are things that like are very, very practical. I just thought I would walk you through. So what are some of the substantive tests? What are some of the substantive tests here? We need to check whether correct rates have been used, for statutory deductions. Have correct rates been used? Have new joiners been properly authorized? So when someone joins the company afresh, we need to check all that. If a company uses the hourly payment system, we also need to check against authorized documentation, because some companies, you just sign in and write, there's a time card for the number of hours you've worked. So all these things are substantive tests. Substantive tests. There's a bunch of them. I don't know if we can go through all of them. I'll try and see if I can go through all of them, because I think they are important. Now, bank and cash. Bank and cash. So you look at it in terms of receipts and payments. So the control objective here is we ensure that money that is received promptly and accurately. In terms of payment, you need to ensure that there's proper authorization for it. Our key controls, again, segregation of duties. Segregation of duties, see it here again, right? Authorization for all payments, again. And there is also sufficient physical custody over checks and cash. So where you keep your checks and where you keep your cash, there must be physical custody controls. Like for example, like a bank, right? When the teller is receiving money, there must be controls around that so that the teller doesn't take any of the money. Then when you move on to test of control, bank reconciliation is key here. You review bank reconciliation. It's also key in substantive test. Review cash book. All those things are important. And the substantive test, you see that send bank confirmation letters. So you need to send bank confirmation to be able to check. Oh, okay. Exactly what, how much amount do they have in the bank? So you send bank confirmation letters. And you also assess audit significance of other information in the reply from bank. You also check bank reconciliation here. So these are substantive tests. What we mean by substantive test is substantive testing is testing this balance in the financial statement. You can also carry out analytical procedures. Is this a bit confusing, or just want to get your feedback? Is it confusing? Is it difficult? Not difficult? Let me get your feedback, please. Is it confusing? Anyway.
I think it's okay. Just have to compare it to what, or just have to imagine what you do if it was your organization, as you said.
Yeah.
What do you think would be the right thing to do so that things will be put in place?
When you pick inventory, for example, right? Inventory. What do you think about? You need to ensure that inventory is recorded accurately. It's valued properly. The quantities maintained are actually what there is to it. So those are the control objectives. Sorry. Those are the control objectives. Sorry. What are some of the key controls? One of the things that should come to mind quickly is inventory counts. Inventory counts. Inventory count. So inventory count is something that is very, very common in organizations. So that's one of the things that should come to you. You also need to review inventory records. And also what we call cut-off procedures. So cut-off procedures is simply, we are trying to ensure that the client does not include in the current financial year inventory related to the next financial year as a way of bloating their financial statements or making their financial statement look good. Right? So you don't want a situation where the client, they intentionally put some inventory to this year, which is actually related to, and it usually happens at the end of the year. So if the client's financial, their year end is, let's say, 31st December 2020, they can push things, they can sneak in things that are related to 1st or 2nd or 3rd January 2021 into 2020. So that's what we mean by cut-off procedures. You need to cut it off. It's 2020, only 2020 items are allowed. Now, test of control, observe inventory counting procedures or review it. Inventory records have to be kept, confirm cut-off procedures are operating and all that. Substantive tests. Here you check inventory value. You check inventory value. You check inventory cut-off. Analytical procedures. So it's even those audit procedures that we talked about, can also help here. You also confirm the existence of the inventory. Confirmation. Confirm the existence of the inventory. Is the inventory actually there? Or they've packaged boxes? These are just empty boxes that they've packaged. I'm saying it's inventory. Okay. Now, non-current assets again. Again, what will be the control objective here? That the value of the non-current asset is correct, that depreciation has been dealt with correctly, revaluations, disposals have been dealt with correctly. Key controls. Key controls. A good one will be a non-current asset register. Impairment reviews is a good key control. Now, what are some of the tests of control that you can do here? You can check for proper authorization of additions and disposal. Additions and disposal. This is if the client wants to do anything, to manipulate this number, they can do it through additions and disposals easily. In substantive testing, one, you can review the movement in non-current assets. What do we mean by movement in non-current assets? This is where the addition and disposals come in. Check additions. You check the calculation for depreciation. Check a sample of additions. All these things help you to substantively test, non-current assets. I recommend that because these are key transaction cycles, I recommend that you go through them and you get familiar with them for your exams. Now let's move on to the review stage of the audit. Let's move on to the review stage of the audit. The need for a review. Having carried out test of control and an appropriate amount of substantive testing, the auditor has reached the stage in the audit where he should carry out a review. A review. It's very, very important. So how does he do this review? How does the auditor do this review? So since the auditor has done his detailed test of controls and all their substantive testing, he should back this up with a broader review of information and events that may have an impact on the financial statement. So how does the auditor get this review, this broader review? They can do this through analytical procedures. Analytical procedures is important in the audit, and it's also important at the review stage. It even helps in planning as well. So analytical procedures is a very, very powerful tool. Very, very powerful tool. Now let's look at evaluation of misstatements. Now, why are we talking about misstatements here? At the review stage, it's also the stage at which the auditor makes an overall evaluation of the level of errors they are found in the financial statements, right? So errors found in the individual areas will be summarized and totaled. So all the errors from receivables to inventory to bank to all the errors will be totaled, right? So we are looking at how an audit is done. After all the errors will be totaled, and then it will be compared to the materiality threshold. So we'll check to see, is this within the materiality threshold? If it's within, then it's probably not material. So the total amount of errors will be compared to the materiality threshold that were set at the planning stage. At the stage of planning, it will be compared to that. And this will allow the auditor to reach a conclusion as to whether the financial statements are materially correct. Materially correct. Very, very important. Now, ISA 450 requires the auditor to carry out the following procedures. ISA 450 is evaluation of misstatements. So number one is to accumulate all the misstatements or total all the misstatements found during the audit. That's the first thing. The first step of the auditor is to add all the misstatements. So after the auditor has found out that, then this total that has been identified, if this total identified during the audit approaches materiality, then we need to decide if the overall audit strategy on audit plan needs to be revised, right? If it's approaching materiality, then it means that there's a problem here. There's a problem here. There's an impending problem because the misstatements are that huge. These misstatements, the auditor should not sit on it, but the auditor has to communicate these misstatements found during the audit to an appropriate level of management and has to request that these misstatements be corrected. There are situations where management will say that, you know what, we are not going to correct these misstatements. We are not going to correct these misstatements. So since this auditing and clients are all adults, it's not that the auditor can catch them, but the auditor must obtain the reasons for this and take these reasons into account when evaluating whether the financial statements as a whole are free from material misstatements. They also need to communicate. I didn't mention that they need to communicate to those charged with governance. Then we cannot talk about this without talking about requesting a written representation. It has to be written, a written representation from management as to whether they believe these uncharacteristic misstatements are immaterial. Request a written representation. Sometimes, what do you call it? Verbal stuff don't really work. So always remember to request a written representation. Now, what are some of the other areas for evaluation and review? Opening balances. Opening balances is another area for evaluation and review. The other information, there's other information, those sections need review. Subsequent events, going concern basis. These things need to be reviewed. Very, very important. Very, very important. So let's talk about opening balances. Opening balances. Now, why are opening balances even important? They're important because, they've been brought forward in the accounting records. So we must make sure that they agree with the prior year financial statements. We must make sure that they agree with the prior year financial statement. That's very, very important. And we must ensure that there's consistency in terms of how it is classified and disclosed between now and prior years. The ISA 510 helps us a lot. And I'll go through some of the things it guides us when it comes to opening balances. You do not have to know all of this, but you just need an idea. ISA 510 provides guidance on auditor's responsibilities in relation to opening balances where the financial statements for the prior period were not audited, right? If there's no prior year, or if the prior year period was not audited, the ISA 510 gives us guidance on that. If it was also audited by another auditor, it also gives us guidance on that. So what will be the objective of the auditor here? The objective of the auditor will be to ensure that the opening balances contain misstatements that materially affect the current period's financial statements. So if the opening balance is wrong, it means that it's going to affect a lot of things. So does it contain any misstatements? That's what we need to find out. And what are the accounting policies that surround, that opening balance? Especially when it has been audited by another auditor. It's very, very important. So what are the audit procedures required? Number one, we need to read the most recent financial statements and audit reports for any information relating to opening balances. And we need to check prior periods closing balances to ensure that they have been correctly brought forward. It's very, very important. It's very, very important. Any questions here? Am I at the right place? Any questions? Okay, now let's talk about comparative information, corresponding figures. Corresponding figures and comparative financial statement. We've talked about opening balances. Now let's talk about comparative figures. Now, audit procedures that have been carried out on comparative figures, are significantly less than those carried out on current year figures. So comparative information. So ISA 710 is saying that this comparative information should agree with previous period, should agree with the prior year period. The accounting policies also must be consistently applied. similar to what we are talking about in opening balances. So the opening balance should tie to the closing balance of prior year. The comparative information here should also agree with previous period. The auditor here is required to perform additional procedures if he becomes aware of a possible material misstatements and must obtain written representations. I don't know if you've realized, but as you go through audits, you see that it's some core answers that run through. And it's those things that you need to be aware of. I don't know if you have any questions so far. Okay. Now let's move on to the next slide and talk about subsequent events. Subsequent events on the accounting side or international IAS is IAS 10, and we are trying to solve a past question on that at that time. And in the auditing side, IAS 560 deals with that. It is not possible to prepare financial statement that present a true and fair view by considering only those events and transactions that take place before the date at which the statement of financial position is prepared. So they are events that subsequently occur after the year end of the client. So what are we saying here? Any material events that occur after the reporting period should also be considered when preparing the financial statement for the year. It's very, very important. Now, what's the purpose of IAS 10? What's the whole purpose of IAS 10? It has two main objectives, right? Number one, it specifies when an entity should adjust its financial statements. Those are adjusting events, right? What we call adjusting events. To specify when an entity should adjust its financial statements for events that occur after the reporting period, but before the financial statements are authorized for issue. And it also specifies the disclosures that should be given about events that have occurred after the reporting period, but before the financial statements were authorized for issue. So IAS 10 gives us a sneak peek into adjusting events and non-adjusting events. There are some events that don't really require us to adjust the financial statements. They only require us to make disclosures. So events after the reporting period are defined in IAS 10 as those events, favorable and unfavorable, that occur between the end of the reporting date and when the financial statements are authorized for issue. So we talked about it, adjusting events, non-adjusting events. Adjusting events, these are events that provide evidence of conditions that already existed at the beginning, at the end of the reporting period.